Somewhere on the internet, a person fills out a short form asking for a car insurance quote. They enter their name, their zip code, their vehicle details, and their contact information, and they click Submit. Within seconds, that information has been packaged, priced, and sold to multiple insurance companies competing for the chance to speak to that person. The person asking for a quote has no idea this happened. They think they are simply shopping for insurance. What they actually did, without knowing it, was generate a commercial asset worth anywhere from $20 to over $200, depending on what they were asking about and where they live. This is the story of how insurance lead generation websites work, how they attract consumers, what they do with the information those consumers provide, and how a simple web form became one of the most profitable data transactions on the internet. To understand the insurance lead generation model, you need to understand the industry it serves. Insurance is one of the most competitive consumer markets in existence. Car insurance, home insurance, life insurance, health insurance. Every major category is contested by dozens of companies spending billions of dollars every year trying to acquire new policyholders. The customer acquisition economics in insurance are extreme. A single auto insurance customer who stays with a carrier for several years represents thousands of dollars in premium revenue. A life insurance policyholder can represent tens of thousands. This means insurance companies can justify spending significant amounts of money to acquire each new customer, because the lifetime value of that customer far exceeds the acquisition cost. The challenge insurance companies face is finding people who are actively shopping right now. Most consumers are not thinking about switching their insurance on any given day, but at specific moments, when renewing a policy, after buying a car or a home, after a life event like getting married or having a child, they enter an active shopping phase where they are comparing options and ready to make a decision. These are the moments insurance companies most want to reach people, and identifying those moments in real time, at scale, is exactly what insurance lead generation websites are built to do. The model starts with content and search visibility. Lead generation websites in the insurance space are typically built around informational content. Articles explaining how auto insurance works, tools that help users estimate what coverage they need, comparison guides that walk through different policy types, and calculators that help people understand their options. This content is designed to rank well in search engines for the queries that people type when they are beginning the insurance shopping process. Someone searching for how much car insurance costs, or what factors affect home insurance premiums, or how to compare life insurance policies, is likely to land on one of these websites. That person has self-identified as someone in the early stages of an insurance decision. Once on the site, the visitor is guided toward a quote request form. The form collects the information an insurance company would need to price a policy: personal details, location, the type and amount of coverage being sought, and contact information including a phone number and email address. The form is presented as a tool to help the visitor get quotes from multiple insurers at once, which is genuinely useful. But the primary purpose of the form, from the website operator's perspective, is to collect a set of data points that can be sold to insurance companies as a lead. The revenue flow is direct. When the visitor submits the form, that submission is processed by a lead management system that evaluates the data in real time. The system assesses the value of the lead based on several factors: the type of insurance being sought, the geographic location of the consumer, the coverage amount indicated, and the quality and completeness of the information provided. High-value categories like life insurance and Medicare supplement plans in competitive markets can generate lead prices well above $100. Auto insurance leads typically sell for lower amounts, but in much higher volumes. The pricing reflects the lifetime value of the customer to the insurance company purchasing the lead and the level of competition among buyers for that particular type of consumer. Once valued, the lead is sold, often to multiple insurance companies simultaneously. This is called a shared lead. The same form submission goes to 3, 4, or 5 competing insurers at the same moment, each of which has agreed to pay the lead generation platform a fixed price for the contact. The consumer then receives calls or emails from multiple companies, which from the consumer's perspective feels like the comparison shopping process they signed up for. From the platform's perspective, it is a single data asset monetized multiple times in a single transaction. A lead priced at $40 per buyer, sold to 4 buyers simultaneously, generates $160 from one form submission. There is also an exclusive lead model, where the lead is sold to only one buyer. Exclusive leads command significantly higher prices because the purchasing company is not competing with other insurers who receive the same information at the same moment. An exclusive auto insurance lead that might sell for $20 in a shared model could sell for $80 to $100 as an exclusive. Insurance companies with strong telephone sales operations often prefer exclusive leads because their close rates are higher when the consumer has not already been contacted by 3 competitors before the company's own agent calls. The pricing of leads is dynamic and adjusts based on supply and demand in real time. Lead generation platforms operate with networks of insurance company buyers who set maximum prices they are willing to pay for specific lead types in specific geographic areas. When multiple buyers are competing for leads in a high-demand area, prices rise. When buyer demand is lower or lead volume is high, prices fall. This auction-like dynamic means the platform is continuously optimizing revenue per lead based on market conditions, without any manual adjustment required. The reason this model works is rooted in the alignment between what the consumer wants, what the platform provides, and what the insurance company needs. The consumer wants quotes without having to contact multiple companies individually. The platform provides a single form that delivers that outcome. The insurance company needs a pipeline of consumers who are actively shopping right now with verified contact information and confirmed intent. The platform delivers that too. Each party in the transaction gets something it values, and the platform collects its fee for facilitating the match. The intent signal captured by a completed insurance quote form is among the highest quality commercial signals available anywhere on the internet. A consumer who has taken the time to fill out a multi-field form with personal details, coverage needs, and contact information is not casually browsing. They are in an active decision-making process. This is qualitatively different from a display ad impression, where the consumer has simply been shown an advertisement while doing something else. It is even more valuable than a search ad click, where the consumer has expressed interest but not yet committed to the process of sharing their information. The form submission represents a genuine, voluntary declaration of purchasing intent, and that specificity is why insurance companies are willing to pay so much for it. What makes this model scalable is that the core asset, the lead generation website and its associated content, can attract traffic continuously without proportional ongoing cost. Once an article ranks well in search results, it generates visitors day after day without additional investment. Each visitor who converts into a form submission generates revenue. The ratio of content investment to ongoing revenue improves over time as the website builds authority and traffic compounds. The lead management infrastructure, the systems that value, route, and sell leads in real time, handles increasing volumes without requiring proportional increases in staffing or operational cost. Geographic expansion is also straightforward. The same model that works for auto insurance in one state works in every state. The same content structure that attracts health insurance searchers works for home insurance searchers. Expanding into new insurance categories or new geographic markets requires content production and buyer network development, but the underlying platform, the payment infrastructure, and the lead routing technology are already in place. What the insurance lead generation model illustrates is a principle about the economics of intent. Across the digital economy, the most valuable data is not demographic data or behavioral data, it is intent data. Information that reveals what a specific person wants to buy right now, with enough specificity and contact detail to act on immediately, is worth more than almost any other type of commercial signal. Insurance lead websites are built entirely around manufacturing that signal at scale and selling it to the buyers with the most financial incentive to act on it. The form on the screen looks like a tool for the consumer. Underneath it is a real-time market for one of the most valuable commodities in digital commerce: the declared intention of a person who is ready to spend money and willing to be contacted by someone who can help them do it.